Reliance Capital also came out with Q3 numbers. We are now joined by Mr. Sam Ghosh, who is the CEO of the company, and CFO, Mr. Amit Bapna. Morning, gentlemen. Thank you for joining us. It's always good to have you back for the quarter gone by, to talk about numbers. Sam, you go first with the big picture and how things have moved for Reliance Capital for the quarter gone by.
Now, if you look at sequentially, our profits have been growing. I think year on year there has been a decline. That's primarily due to market conditions. Obviously, interest rate scenario has been high. There have been small losses in our general insurance business, which we're gradually bringing back in line. So if you look at overall from business perspective, our asset management business performance is good. AUMs have declined, but that's why the profit had come down slightly. But if you look going forward, we can see that AUMs will grow, market looks good, and therefore profits in that business will grow significantly. If you look at our life insurance business, obviously with the change in the mix of business, we are now at about 70% traditional business. Compared to last year, we are at about 50% traditional business. So therefore, and traditional business also, the average ticket size per policy is about half that of a unit-linked business. And that has brought down the premium size, but going forward, the total premium rather. But going forward, obviously, that will increase because number of policies we are selling continues to grow, and traditional policies numbers and the average ticket size also starts increasing. So on the life side also there's growth expected in the next few quarters. Then if you look at our commercial finance business, there again with the high interest rate regime, obviously the business was profit was slightly down compared to last year, but sequentially it's improved. And going forward, we know that we are more or less at the top end of the rate cycle, and therefore we expect the profits to go up significantly in going forward. And finally, on broking and distribution, which has performed very well. If you look at under the current market conditions, where the equity market had gone through quite a turmoil in the last quarter, our combined Reliance Securities business, which is equities and commodities did very well. So therefore, that balanced it out, and therefore profit remains the same as last year, and sequentially also it's improved. And finally, on the distribution side also, because of gold sales and sale of and on the money transfer side where we've done significantly well, our profits have more or less doubled compared to sequentially, and it's also increased compared to last year. So I can see that and general insurance, as I mentioned also, if I just add that, general insurance, though the loss has been slightly higher this quarter, the main reason for that is the motor third-party pool, where we've been reserving adequately, and going forward I know that we'll reserve more, and however we're coming to a peak where reserving requirements are adequate, and therefore profits will start emerging from that business. So if you look at all the businesses together, 5 businesses together, we can see that there's going to be significant improvement going forward, and an upside in the fourth quarter as well as going forward in the next financial year.
Sam, just to clarify, you recently announced a huge stake sale of the AMC business to Nippon Life as well. Have the proceeds from the sale come in your books yet?
If you look at on the asset management business, we have said that we have filed the documents, and we'll be awaiting obviously regulatory clearances. Once the regulatory clearance comes through, then only will the funds come in. So we have yet for the funds there, we are awaiting obviously regulatory clearance before we can get the funds.
Sam, can you give us some color on the performance of insurance and or insurance of both your key verticals, life insurance and then general insurance?
Okay, as I mentioned, I think on the life insurance side, we expect that we've been for the last 5 quarters we've shown profits, and profits will continue to grow. However, the big thing is the profits from our traditional business, which is about 70% of our business today. That profit we haven't booked. Being conservative, we feel that it should be looked at by the actuary and finally signed off by the actuary as well as the auditors, and we will book the profit from that business in the last quarter. So there will be substantial upside for the life insurance business in the last quarter. On the general insurance side, as I mentioned, that we've been providing for the motor third-party business quite at an aggressive rate, and we expect that in the last quarter, other than what will come out from the motor third-party pool reserving requirement, there won't be substantial requirement for providing on the private car side of the third-party business. So I think going forward, as I said, the results will be better for all the businesses. And on the asset management side, as I've said, AUMs have started growing significantly in this financial year, in this last 1 month, 1.5 months. And therefore, going forward, obviously, profits will also increase significantly.
So, Sam, what would be the profitability drivers for Reliance Capital from here onwards?
Going forward in FY 12-13, if you look at our asset management business will continue to grow. But profitability-wise, I think, if on the asset management side, we expect either 20 to 30% growth on the profits, which we expect this year. On the life insurance side, obviously there'll be significant profits this year, and going forward, that will be the most profitable of our businesses. Primarily due to the size of the business, as well as due to the big renewal base it has, that starts generating profits. And once a life company starts generating profits, it generates significant amounts of profits. On the commercial finance side, as we believe we've reached the top end of the rate cycle, and therefore going forward, we think that we will get significant benefits on our portfolio of business, especially on the commercial vehicle and the auto portfolio that we have written. The profits from that will emerge in the next 3-4 quarters. So we expect also profits to come out. On broking and distribution also, it's been growing at a steady pace. But going forward, we feel that the profitability will at least double in the next financial year. And finally, on the general insurance side, I feel that in FY 12-13, we should certainly show break-even or a small profit. So if you look at all the business together, obviously, if you look at which one's going to show the highest profit, obviously life we expect will show the highest profit, followed by asset management, and then followed by our commercial finance, or similar type of level as the asset management business, commercial finance will produce, and then the broking and distribution business and the general insurance business.
Sam, what is your outlook for asset quality for the business, and how do you see your asset quality moving in coming quarters?
If you look at our results, NPAs have remained flat, and we've more or less gone through one or two cycles, one cycle at least, and we've had no spikes despite interest rate increases. It remains at about 1.2%, which I think is a very healthy NPA level for a company which is focusing on these 4 or 5 sectors.
Amit, I want to bring you in as well in this conversation. Are you seeing some softening in cost of funds? Will NIMs get a push up in the coming quarters to come?
The cost of funds over the last few quarters have gone up because it's been a high interest rate regime right now. But we see the interest rate cycle having peaked, and from here, once the rates start declining, we'll see margins improving. Currently, our NIMs are around 4.1%. You will see that again going up over the next few quarters.
Morning, Amit. What about the debt situation for the company, and going forward, are you confident of reducing your debt levels?
Our net debt position has significantly improved. It was 21,000 crores in September end. It's down to 18,000 crores by December end, of which 15,000 crores is our retail lending book. So effectively, we have 3,000 crores of debt. This number will also, our endeavor will be to reduce this number as well, post the asset management stake sale closure happening. So effectively, if you have 1,500 crores of debt, it's not significant looking at the balance sheet size today.